holding it back. We have a whole bunch of tech names, whether it's the NASDAQ or the Dow, that are down. Twitter and Facebook shares are in the red after the microblogging giant Twitter released the details, first of what CEO Jack Dorsey will be telling lawmakers tomorrow in what is expected to be a series of very heated hearings on Capitol Hill. Dorsey is expected to tell the House Energy and Commerce Committee that Twitter does not use political ideology to make any decisions. There is some question about that. On the Senate side, Dorsey will be joined by Facebook COO Sheryl Sandberg. She has released some sort of broad strokes on what she is expected to say. Google CEO Sundar Pichai is drawing the ire of lawmakers after refusing outright the invitation to testify at tomorrow's hearings. Let's look at shares of all three social media leaders, and they are, as I mentioned, in the red right now, but you can see it is really very much Facebook that is down the most, about 2.5%. Facebook has sort of been dealing with an outsized amount of outrage after having revealed millions of users' data and information. Amazon has cracked the club. It is now the second publicly listed company to reach and touch a market cap of more than $1 trillion. However, it touched it and then retreated just a bit. We're at $995 billion in market share at the moment. And get this, if Amazon keeps up the pace, it may even surpass Apple, which was the first to hit $1 trillion on August 2nd for market cap, but now is at about $1.1 trillion. So speed and timing is of the essence. We've got this breaking news from Motor City. Bloomberg is reporting General Motors sales fell about 13% in the month of August. The automaker pulled back on sales incentives, and that probably gave it a hurt there. GM right now down about 1.25%. To Ford, Ford credits the SUV buyers as the very reason it has been able to post better than expected sales figures for August. Ford is pretty much flat right now on trading volume of 37 million shares, but Ford says sales were up 4.1% from last year, despite estimates for a drop of 1.8%. Sales specifically of SUVs surging 20%. All right, so as we look at the Dow Jones Industrials, it's down about 23 points. But as I said earlier, we were down about 150 points. Maybe some of the renewed interest here has to do with what the chairman of the White House Council of Economic Advisors just told Fox Business exclusively. Kevin Hassett just told us he expects 3.5% GDP for the third quarter. That is certainly better and closer to the Atlanta, it's certainly closer to the Atlanta Fed's prediction and way better than the New York Fed's prediction. So I want to know what the traders think about this. I know you guys often dread the month of September. It's been the worst performing month of the year for the major averages. The Dow and the S&P performance has dropped every September since 1950. Will we buck the trend this time? Let's bring in our traders here. Great to see you guys. Are you guys putting on your battle gear? I'll begin with you, John Corpina.
You know, I'm going to buck the trend here, I think, for two reasons. One is this September is so different than any other September we've had before, right? Different economy, different administration, different global economy. So I think that's quite different than what we've seen. And also, I don't think right now today is any different than where we were in June or May. The headlines are the same. The market reactions are the same. We're talking about interest rates, tariffs, China, all the same topics are still here. So nothing has truly changed in the last 3 or 4 months. So I think September, it's going to be a slow week this week. We have a Jewish holiday next week. That'll be slow also. I think the quarter is going to end on a positive note heading us into the fourth quarter.
Okay. Phil Flynn, you give me your assessment here, because every time that I have done a September in business news, and I think I'm going on 20 years.
Right.
I mean, everybody says, oh, it's historically the worst month, and then we make it through. And the market over time continues to rise and rise and rise.
It does. Well, this is going to be a September to remember, to steal an ad from somebody. Yeah, I agree with John Corpina. I think he's hitting the nail on the head. Look at the manufacturing data we got. What was it, the highest level in 14 years?
Correct.
We look at the business confidence number, consumer confidence, the highest level it's been in decades. And look at those Fords. Everybody's buying an SUV. You only buy an SUV when gas prices are going up, when you're feeling good about the economy, right? So I'm very optimistic about the month of September. listen, we all know interest rates are going to go up this month, and I think the market has that priced in to a large degree. And I think when that actually happens, I think the Fed's going to come off as a little more defensive, a little more conservative, and not so hawkish. And it could set the stage for a big rally after the Fed meeting. So I'm very optimistic about this month. I don't think you want to miss out on this September, because I think we're going to break that long losing streak of Septembers.
Any more, Larry? I think Phil is right. You don't want to miss out on any month. You know, if you do that dollar cost averaging and put a fixed amount in every single month, then you're catching both the highs and the lows, and that, I think, is significant and helpful to a portfolio. That said, where do you stand on this? We just had Kevin Hassett saying 3.5% GDP for third quarter. That certainly looks muscular enough, and as we continue to see things go, are you worried at all about anything in the emerging markets? And I bring that up because Argentina, and nobody's saying that we're going to have any kind of spread here, but Argentina's currency is collapsing. We saw this a week or two ago with Turkey, and people are pulling money out of emerging markets.
Yeah, I think this is going to be a month for knee-jerk reactions in emerging markets, especially mainland China. I think it's a really good time to buy. The dollar is overstretched. It's 10% overvalued by a 30-year average and only 2% below where it was in 2002. That said, you know, there's a negative correlation between the two. So if you think the dollar is going to retrace, a good time to get into the emerging markets, but selectively so, not just every country, but right now looking at countries like, you know, mainland China, also Korea. Good place to put your money. Beyond that, I think the fundamentals are still tracking. Corporate profits are really good. We have capital expenditure depreciation ratios very, very low. Quarter two earnings season raised full year guidance for a large part of the stock market. Consumers doing well, and also central banks are still very accommodative.
This is true. This is true. And I don't know if they're going to be behind the curve or not. We shall be watching. John, Phil, Larry, thank you so much. I do just want to make a quick note about Argentina. President Trump got on the phone with the head of Argentina.